Hey everybody, good afternoon. Welcome to 12-Minute Trading. This is Doc Severson. I'm joined here with Dave Lukas. Today's Monday, the 27th, and it is DeepSeek crash day here at 12-Minute Trading. So we kind of woke up to the news on Sunday that like, oh, this little Chinese company that has only spent $1 million in R&D can do the same thing as the big boys in AI, and it just kind of rocked everything. We don't know whether to believe it or not, but it's being used as a profit-taking event today. We'll find out by the end of the week if this is something. But there you go. Like since the July time frame, every week has been something. This has been one of the spicier markets that I remember with this kind of volatility that we're seeing. What what are you seeing these days, Dave?
I think people should get used to this. This is kind of the new norm in the markets. This is what
Yeah.
zero DTE does. I guarantee you most of the options traded are zero DTE today, right? There's a lot of short covering and stuff with NVIDIA and everything, but let's just level set on what this is. Number one, last week you and I were here, right? What did we say? We said the daily energies and the charts had exhausted themselves to the upside and they needed to pull back, right?
That was two
We
two weeks ago, but
or even 2 weeks,
it,
yeah,
it
two
felt
weeks
like
ago.
last week.
Sorry, yeah, last week. You and I were on with our Replace the Income Challenge students saying
Right.
that last week, right? But but anyways, 2 weeks ago and into this week, for anybody that's in our world, we've been saying this chart's exhausted. Expect a pullback. We expected a pullback to like the breakout zone, right? Which the S&P, as I say this, is at 6,006 points, right at that breakout zone. I thought it would happen over the course of this week. You'd have the Fed and some other things that just kind of slowly drove things down. But DeepSeek came in and we're doing it all in one day. I wouldn't be surprised to see a relief rally tomorrow off of this. But what is DeepSeek, right? So let's just level set on that real quick so everybody knows. There's a Chinese hedge fund that, like, in its spare time, threw about $10 million at creating basically a competitor to ChatGPT. And supposedly they created this thing in about 2 or 3 months and spent, just the 10 million bucks and only require 2 or 3% of the chips that effectively, OpenAI requires and stuff to run everything, right? Which goes straight to the heart of the semiconductors and NVIDIA. So why is NVIDIA selling off like crazy today? Everybody that is panicking over this or thinks this might be real, remember the market's a forward-looking instrument. It's trading off what it believes the future may be. So the panic today is, holy crap, we bid NVIDIA up to these skyrocket nosebleed levels based on this future demand that we expect it to need for its chips. Well, if these models don't need that much in the way of chips and only need a few percent of what is actually thought is needed, what do you expect to happen, right? It's going to come back down to earth. And that's why all the chip stocks are getting beat up today. Now, the thing that we don't know, and I think there's probably a good chance that this is true, because remember, NVDA can't sell its chips in China. There's a blockade effectively on that, right? So probably a good chance that there's a bunch of black market chips these guys got from NVIDIA that they're running this thing on, and they've got the Chinese government helping sponsor it and all that stuff involved.
Oh, they are
Um,
using NVIDIA chips.
they are, but not like they're using the older generation chips and not as many or whatever, right? But the point is like where it takes like, 50,000 XYZ top of the line NVIDIA chips, these guys don't need that, right? That's why it's getting sold off because the future may not need as many chips. Now, this is actually not uncommon in the tech space, right? You leapfrog your last, breakthroughs and stuff. So, even Mark Andreessen of Andreessen Horowitz, probably one of the most successful private equity firms of all time, is saying this is a Sputnik moment. Sputnik moment was Sputnik for the Russians. That spurred us to go to space, right? So it definitely will light a fire underneath, us right over here in the US to make sure that we are doing our next leapfrog because it's not even so much that they did this, it's also the fact that now China's got something on par with what we have. Remember, this is an arms race in the end, right? So it's also kind of like, oh crap, we were way up here and nobody was catching up, but all of a sudden now somebody's at the same level as us. Whether they're using the same amount of NVIDIA chips or whatever, that doesn't matter so much when it comes to the grand scheme of things. It's a race to, control AI, right? So all that's coming to confluence, but in the backdrop, we knew that the charts were tired. We knew the energies were exhausted. The market needed an excuse, and you're getting that, right? So what I would expect to happen, and then you can pull up charts and give some thoughts. What I would expect to happen is that it's going to take the better part of this week to figure this out and kind of find a support level. And then once we see that and the daily energy charges back up, which is going to take a few more days, then I would not be surprised to see us off to the races to the upside again. I don't think this is enough to turn it and make us crash 10 or 15%. I just don't think in fact, this is, if anything, spurs more buying of chips and stuff in the future and stuff because now we got to catch up, right? So it's just a knee-jerk reaction, and that's kind of how it looks today.
All right. Well, let me bring up the charts here. I'm going to start out with just the daily fractals for the monthly and the weekly and the daily over here. And the thing that we pointed out 2 weeks ago was that this was heading higher, and it seems like we must have been like right around here when we talked about this because I think it was on the verge of going into exhaustion. And then as we got into last week, it definitely went into crazy zone up here. So we went to a level of exhaustion that we barely see. So actually what's happening right now is the market's doing exactly what it should be doing,
Yep.
which is to, range expansion, range contraction. And one of the fastest ways to achieve range contraction and to recharge the chart is just to go backwards, is to, go back from where you came. And it so far has bounced off the 50-day moving average so far, as well as this is where we can bring in the fibs and understand that. But if we draw the fibs on this dude, so we got down to about 50%. Actually, the ES is a little bit more accurate on this. I'm going to bring up the ES here for a second because the ES will actually show the pre and post market price action. There we go. Okay, a little bit messy, but we'll see if we can zoom in here on this. Okay, so there we go. Here's the bottom of the move. Here's the top of the move. The price has come down all the way this morning to the 61.8 retracement. Right now, it's holding at the confluence of, well, right at the 38.2 retracement, which is actually a standard pullback. So this is a very average pullback. So what started off as a mean and ugly day, and we were talking about limit down and everything like that, so far looks like it's a fairly normal. What we're going to watch for is in the next 100 minutes, and this is going to, 80 minutes, this is going to really set the tone of the market, how this closes, and then we're going to be watching how this closes on the intraday chart. So right now we're above the anchored VWAP on the day, and we're up near the upper expected move on the day. So based on where it actually opened, it's starting to show a little bit of strength, and we're starting to see the Dow take leadership. The Russell was actually strong for a while, but it's kind of given way. This is really all about the NASDAQ being weak today. This is all
I was going
about
to
the
say
NASDAQ.
that. That's one of the other things that gives me an idea that this is just really kind of, a little bit of panic and stuff. Is if we were really going to roll over here and this was going to be the start of the next bigger correction, everything would be going with it. The Dow would be going with it, everything. But the Dow's up 300 points. The Russell's it's down 20 points or so, right? 25 points. That's nothing because its daily energy was tired. It needed to charge back up. We've been saying that too. So that's fine. In fact, rates dropped today, which actually helps the Russell. And then you've got the NASDAQ, the NDX is what's taking it on the chin, right? Which is what you'd expect. And so, that's what's also bleeding into the S&P. If there wasn't so much tech in the S&P wouldn't be having a day like today. So it's, again, I just think this is one of those kind of panic moments that sorts itself out over another few days or so.
So here's your weekly chart on the Nasdaq showing that
Hmm.
the center moving average is still holding the price, and
Yep.
it's we're actually at a really high energy level on this. So
Yes.
this is causing the little short term panic across markets, but larger term, if you zoom out on this, if you didn't know anything about the news, and if you were to look at this chart, you would say, "Oh, it looks like it's all set up to go." So
Hmm.
really, all we're looking for on most of these charts is for, not unlike what happened back in 2016 for Brexit. If you remember
Yep.
Brexit, we were going sideways, and all of a sudden we got 2 days of, oh my gosh, what's going on? And, when in doubt, palms out, let's sell everything right now. And then a week later, we were much, much higher. And that went all the way into the election. So, yeah, NASDAQ is below the center of the Bollinger Bands, but a weekly chart is still good there.
Yep.
So, hey guys, we'll be
So
here
and
for
and don't
another.
and don't rule out the fact that this was a hedge fund that came out with this and everything, and they could have pulled a nice short on Nvidia by setting that up before they announced this as well too. That would be like a Soros level type move, but don't rule out that a hedge fund's in business to make money too. So they knew announcing this would definitely cause Nvidia and some of these things to drop. So you know that's another potential that could happen as well
Yeah,
or be part of it.
pull a Bill Ackman from 2020. He
Hmm.
was perfectly positioned for him to go on
Yep.
CNBC. So, hey guys, let us know if there's any questions. If there's anything you want to bring up, we're going to be around here for a few more minutes. So go ahead.
Let's look at IBIT. Let's look at Bitcoin because IBIT's the closest thing for kind of tracking that.
Okay, so let's look at.
'Cause you entered a trade in the room on this today, right?
Yes, I did. So
Hmm.
I was selling down here at, I think, 53, 53, 53 and a half. So selling at the bottom of the range for early March. It would be a committed buyer if the price were to come down there and assign me. That would be fine because that's the bottom of the range. It represents a discount. I, you could probably still get premium down here if you really wanted to. I mean, down in the 40s with some of these things. If you go out to, you got some premium down here, but I don't like picking up the nickels. I'd rather pick up some $5 bills and things like that. If I'm going to be risking my neck in front of the steamroller, I'd rather be picking up a 5, 10, or a $20 bill in front of that. So that's so I'm willing to stand in front of that. Yeah, I believe I got the 53 and a half, which was at the time 30 delta. So now
Hmm.
it's actually higher than that. So it's in the money. So let's look at this on a fractal basis. This is also crazy. If we look at the IBIT, look at the amount of energy here on the weekly chart. On the daily chart is screaming higher because this pullback is allowing this to
Hmm.
recharge. So everything is looking really good right now.
Look at that weekly flag and daily flag that's just set up
Yeah,
there.
this
I mean,
is it's
you've
a whole
followed
fractal.
Bitcoin for a long time. I mean, you recognize these patterns. I mean, this looks like exactly the consolidation before it breaks out to 120, 130 plus maybe coming in the months
Yeah,
ahead.
I think so. I think so. We're setting the hook, and what I was talking about in my report this weekend was it was flagging out. It looked like it was starting to break higher because it broke above this descending flag pattern. And it's just kind of lame, right? It's just kind of lame when you have these sort of this is the only type of price action, or this is the type of price action that we get when it's really, really quiet and trending and everything is very linear. And it doesn't feel like that right now. So what I thought was going to happen was for this to come out of the bottom of the pattern and then set up the slingshot to the upside. Remember, you've got to set up the negativity You got to set up the negativity here. I'm going to draw a sad face because it's you got to get to the point where people are panicking, and then and only then do you have the right conditions to send this thing like through the moon. So just about everything works like that. It's really rare when we get sort of this stair-stepping price action like that. It's only we had that the first 6 months of last year, and then things it was right around the time of the Trump shooting in mid-July, where things just started going nuts, and we started seeing the ATR really rising. So the ATR, if I go back to here, this shows where you start to see, like right around here. You see this in July? This is where everything just sort of took off. And we got this much higher realized volatility. And we still have not let go of that. So this is not at all like the market that we had at the end of 23 and the first chunk of 24, really in the first half of the year. It's been relatively volatile since that point.
Yeah, but it's holding well and it's continuing that, it just seems like it's ready to go again. And you got the SPX now. So we're still right around 6,000, right? Like if you go back to the daily chart, or right there's fine. Look at where we took out if you look at it, we were doing a series of lower highs, lower lows, lower highs, lower lows. And then we took out the previous lower high. And you can see that right back there, right around 6,000, right? And so now what have we done? We are coming back and we're testing that level. Gosh, it's such a textbook. It's almost too textbook and perfect to come back and test that level. Again, I thought it might take a few days to sweep through the Fed. We get it on Thursday and then be all charged up, but we're just doing it in one day. And that's exactly right. What you're putting out there is just, do we find the support here? That if we do see support, if we just level off in this area for the next 3 or 4 days, and that daily energy charges up, I have to give the upside, where things release from there.
See, to me, I think what we'll probably end up doing is something like this tomorrow.
Undercut?
No, not necessarily. I think it'll be an inside day.
Mm-hmm.
Tomorrow, it'll just stay within today's range because the market's just going to sit there and tread water and mark time until we get past the Fed. So
Yep.
even though everybody knows, everybody in the planet, including people in parts of Asia that have never seen a human being, they know that Powell is not going to cut rates tomorrow. They're not going to raise rates. They're not going to cut rates. But it's all about the language. It's all about his tone, his posture, his shift of tense, if you will, in terms of their what's the right word for it here? Their potential of keeping on the dot plot for at least two. So right now, I think the expectation is maybe only one, although the Fed funds futures show two by the end of the year. And so if he verifies a dot plot of two by the end of the year, we'll see, we'll see a move like this on Wednesday.
Yeah.
So we'll
Yeah.
we'll see what happens. But then again, we could also see a move down to here on Wednesday if he doesn't play ball. If he's going to take a hard stance and if he's going to say, I'm not going to let Trump tell me what to do,
Yep.
which is very well what he might be thinking right now, then we may end up retesting some of these lows down here. But I think ultimately as we get into the first quarter, and we're about a third of the way through the first quarter right now, and it's been quite a show here. Let's see.
We really just haven't gone very much anywhere.
Yeah, I mean, we
since
started
December.
here, we went up, we went down, we went way up, we went down, and we just kind of walking sideways right now through the
Yep.
year. Okay. Well, I'm going to throw it back here. Guys, if you have any questions, anything else that you want us to talk about today, we are here for the next couple of minutes. So we'd be happy to take your questions. Or if you're watching this on a replay, you can always send your questions in to support@12minutetrading.com.
Looks like we're accelerating a little bit again. Yeah, we are. We're accelerating some now.
to
So
the
we may be
downside.
finishing at the lows of the day, although it's a little early. So you never underestimate a whale to step in the final 30 minutes and drive things up like crazy, right? So, all right, looks like we got one from Jungle Cat. FinViz heat map for today. It's very, very tight. Oh, last I looked, it was interesting to see Apple's up big, and that's maybe because it was pretty exhausted and it was ready to go you know, uh, back the other way, coming off the bottom of the daily energy. But I think some of that also is people download this app. The number one thing in the App Store today is DeepSeek. Now, I wouldn't download it personally because anything in that, from China, basically the government has control of every keystroke. But it's, up to you if you want to do that. But that could be some of what's driving Apple. The other thing I saw earlier, and it's not up anymore, I don't think. Meta was up. Meta, yeah, it's about even, it looks like now.
Meta's flat right now.
Yeah, Meta's flat, but it was up. Now, people will be like, why isn't Meta selling off? Microsoft's selling off big time. Why? Because they invested 10 billion into OpenAI. And so they've got a huge position in it, basically, that's tied to them with Copilot and everything else. Meta, though, if you think about Meta, why would Meta be even? Like, everybody's like, well, aren't they AI? Aren't they doing this stuff too?
They're a,
Meta,
they're a user of it.
Meta, yeah, it builds on top of these, right? But what Meta would have had, what everybody was thinking Meta would have to do is invest all this money into the chips, the hardware, and all this stuff. Well, guess what? If it costs a lot less, Meta doesn't have the capex that people were expecting, which means it's more profitable. So Meta stays up. Some of these others too. So that's kind of what we're seeing some of that rotation into the Dow, safer stuff. Seeing the rotation into bonds, right? Seeing I think the 10 year is down 10 basis points or so today. The dividend players, TNT, Verizon, that going for safety. So that's not a surprise, in this. So all the ones that surround the data centers and surround the semiconductor arena is getting beat up.
Yeah, so this is what we're watching. We're still running inside the opening range here.
Mm-hmm.
Still and we'll probably end up because of the fact that this was rejected here at the upper expected move, probably we'll spend the next hour inside the opening range. I think we probably won't make another run at this. I think we'll probably run sideways and we'll probably end up tomorrow will be very much inside of the same range as today.
Yep. Yeah, a really little relief bounce tomorrow, and then you got kind of hold the breath through the Fed, see what happens. Again, on Fed Day 2, Wednesday, the reaction that happens a lot of times on Fed Day isn't the real reaction. So I'll be watching Thursday to see what it really tells us. Another thing to watch right now too, guys, we got a few minutes left, is gold. GLD selling off a little bit today, but it's perfect textbook. Go pull up the daily chart on GLD. I've been playing GLD a lot with 50/50s lately. But if you pull up the daily chart on there, you'll see it was overextended to the upside, needed to charge itself back up, and we're getting a little sell-off. I think, yeah, 250, I think is what probably it comes down to, and hangs in that range, maybe walks sideways. You could get a relief rally on it tomorrow, but you look at there you go. Yep.
Yeah, so you're into exhaustion up near overhead
Yep,
resistance.
exactly. So perfect time for it to pull back, consolidate in that arena. And then you can see the weekly charts started to release higher. And then so I could see gold breaking out, GLD above 260 in the coming weeks to burn out the rest of that energy once the daily gets charged back up.
Which is good because I've got a 260 covered call on gold right now.
So, but again, there's where things are happening in one area of the market, there's always opportunities, right? So, I mean, NVDA is you're down. What was it, down 24 points, 25 points last I looked? I mean, if you want to own it, you're getting a heck of a deal to own it right now. If you're long term on that stock, you can even sell, you can even go lower and sell puts at like 110 on that thing right now. But look at the chart. Look at the
So if we went out right now, the chart is we're down at what 117.
yeah, the lows of the day.
So yeah, we're at lows of the day 117. If you went out to March, you could sell. Well, you could get at least
100?
yeah, you could sell 80 for at least 1.5% or so.
That's crazy.
And so you can sell 86 for 2%, and that's at a 10 delta. So there's only a 10% chance of the price getting down there. And so you could sell 100, and you're getting 4.5, 5% on something like
On your
that.
money. And then you get NVDA down at 100, which I think would be if there was a level that I think would be a great place for buyers to step in, that's where I'd step in. I'd buy shares at 100.
Yeah,
That's a good spot.
even if it's to a lower high, you can play the bounce.
But look at that chart. Look at the monthly chart on that thing. This thing is like, that's not normal, folks. To go straight up like that, you're going to come back down to earth at some point. So this is just, it's just repricing it. So you can see where 100 is, right? It comes back down, puts it inside that range. Even 87-ish, right? Where the moving average is. Like it could, that wouldn't be like, that's still a big, like, higher low in the stock coming down to there. So this is one that, it can come back down to earth.
Yeah, it's down to the 50-week moving average right now, 50-week moving average. So you could play this off the 50-month if you wanted to, which is about 90. So yeah, that's massive. So
So let me show you something I was looking at before this. I may go back. I may do it. I actually may do it with my students. If you go back to the trade tab and just go out to June. So my old school style of trading forever was to look for stocks that had been, beaten down past the lower Bollinger Bands, that had, really exhausted that energy to the downside, and then going and selling it like a 10 delta 6 months out. If you look, that's like an 80 on this thing into June. So if you do like a spread, like an 80 by 70 spread out to June, it's like a 10 delta, right? Right in that range. So do an 80 by 70 spread, you're picking up 10% on your money. It's just like a sell a vertical there and see what it looks like. I mean, it's not too bad. 80 by 70, yeah.
So yeah, on $1,000 of risk per contract,
you're making $112.
Yeah.
I mean, and if you're like, hey, I want to make 8%, you could go down to probably 75 by 65. I mean, that's, a good another 40, $50 that
Right.
this thing would have to drop,
So your risk on something like that would be about 888 per
It's what we call a
contract.
high probability trade.
Right.
So
looking good.
But I used to do it at times like this, because what would happen is in the ensuing weeks or month, you get that bounce back in the stock, right? It may not go back to the highs it was at before. You get the bounce back, it would run away from it, and then you could buy that thing back for 20 cents or whatever it is and lock in your profits. So it's just my old school way of doing things when we had monthly options.
Okay, so we need to wrap things up here, guys. Thank you for joining us here today. We did have actually a fair amount of people on board with only one question, though. So everybody's probably shell-shocked.
We covered it all. They got all their answers.
Everybody's shell-shocked. So this is very normal. The market's doing what it needs to do. If it starts to unfurl a little bit more than that, then we'll certainly know, and we'll keep you guys in the loop if you're one of our customers. But right now, this is just a very normal thing. This is a market recharging itself and maybe getting ready to put on the next move. We'll find out. So watch for the market. Watch for tomorrow. Should be range day. Wednesday, we'll start to get maybe an opposite move. And then Thursday should be the day that this move is going to go one way or the other. So,
yeah.
All righty, everybody.
Thank
Thanks
you
very much. So from Dave, myself, we're out of here. We'll talk to you guys next week. Bye now.